Hello everyone, welcome back to Chart Engineers, and on today's lesson of the syllabus where you're going to cover entry techniques. So I'm not sure if any of you guys have attempted to reverse engineer either mine, CoinTrader or Litz's charts and the trades we post on Twitter, but if you did, you might have been able to tell that all of our entries are very similar, and that is what I'm going to show you today. So to start, we're going to go over some key terms, and these key terms are going to be used every day in the Discord server, so it would be very wise to keep note of them. So to start, we have our market structure break, which is MSB, and you guys should already be familiar with this term as this was pretty much the key part about the first lesson in the syllabus. And then we have a new term, which is BZ, just stands for breaker zone, and then we have RC, which stands for red candle, and then we have our bullish breaker and our bearish breaker. So breakers, there's two types as you just saw, bullish breaker and a bearish breaker. So what a bullish breaker is, it's the last up candle before the sweep or move below old lows, and then a bearish breaker, the last down candle before the sweep / move above old highs. So what is this gonna look like on a chart? So for me, my bullish candle would be white, so my last up candle is going to be white and my last down candle is going to be black. So why are breakers effective? So it's effective because this is how we see where the institutions are getting in the market essentially. So the sweep of the swing high is where retail buy stops will reside. So these stops are then paired with institutional sell orders. So the institutions are selling when retail traders are buying. And then the opposite, when we get a sweep of a swing low, that is where retail sell stops will reside, and then these stops are then paired with institutional buy orders. So when the retail are selling, the institutions are buying. But sometimes we have to remember that it might just be a reaction from the high or low rather than a full reversal, and all this will show is that the institutions are simply profit taking rather than getting into new positions. So what we can do is, if we wait for the MSB as confirmation, usually that will be the signal for the market to continue trending in that direction. So here's just a visual representation of a chart. As we see below all these old lows, there's been some buying going on here and it's caused this surge up, and then over here they're selling above old highs, so this might just be profit taking or larger sells, and then below these old lows, this is where the institutions are buying again, and then again above these old highs they're selling, and then the market comes down below all these lows and they start buying. Market comes up, then it comes lower and they start buying again below the old lows. So now here we have a bullish breaker and what it will look like in actual candlesticks. So again, just the last up candle before the sweep / move below old lows. As we can see this price fractal here, we're going to have our sweep of the low, and then the market has pushed up and given us our market structure break. So that shows us the market will continue in that direction, or well, at least we anticipate it to continue in that direction. So our entry technique would be using the bullish breaker. So that is the last up candle before the move below old lows. So we have that low and that low there, and as we see the market's pushed down and then pushed up. So how I would trade this is I would just set my buy limit at the top and my stop loss below. And then as we can see, the market has pushed up and then it's come down, but here it's wicked through our level. So that is one of the cons. Our stop loss was too tight, and in this case it stopped us out of our trade. And now let's see what's happened after. The market has pushed up. So where we could have potentially been in this trade for that entire push up, we tried to have a stop loss too tight and we got taken out of the market. So what we do is we can have our bullish breaker zone as shown below. We make our stop loss a bit bigger, and then we found that we can have a higher win rate with still R that is high enough. So if we use the full breaker zone as shown below, we could have been in this trade here. So now we have our bullish breaker zone and the concept of it. So to start, price will form a swing low, and then price will form a swing high, and then the market will come down below the old swing low. So that is retail sell stops here, and they get triggered, and then they become paired with the institution's buy orders, and then the market pushes all the way up, market structure break. So we anticipate the market to come down before pushing back up. And then as we can see, this whole area below here is where the institutions are getting into their buys on the down move. So now if we look at what a bullish breaker zone would look like in terms of actual candlesticks, again it's going to be the same. We get our swing lows, we get our swing highs, and then the market comes down, takes out the swing lows. So the liquidity has now been taken out, and that is our institutional orders paired with the retail sells. And now as we can see, the market has pushed up. We have our market structure break, and then that would be our breaker zone. So the way we draw it is going to be from the last bullish / up candle or our breaker before the sweep to the bottom of the red candle. And then as you see, this is how we would mark it out. And to trade it, all we would do is wait for our market structure break and then set a buy limit at the top of the breaker zone with our stop loss below the red candle. So as we can see from the green and red, green is our entry and red is our stop loss. So now we just wait for the market to come back and come into our area. And now as you can see, the market has come down. We've now been filled into our buys, and now we expect the market to push up and continue in that direction. As we can see, that is what has happened. However, sometimes we can refine our breaker zone just to the red candle, and in return this will give us better risk to reward on our trades, so higher R, but it does come with sometimes you won't get filled into your trade just because the market will not retrace that low. So now we're going to have a bearish breaker, which is the exact opposite of a bullish breaker. So to start, we're going to have our last down candle before the sweep / move above our highs. So as we can see here, we have our sweep, and then we have our breaker here, last down candle before the sweep or move above old high. And as we can see, we have our market structure break, so we would trade this the exact same as a normal breaker, entry there, stop loss there, and now the market continues up, takes us out of our trade, and then continues in our direction. So again, if we just make our stop loss a bit bigger towards the high, this would be our breaker zone and we would still be in this trade. So a bearish breaker zone, again, exact opposite of a bullish breaker zone. This first step, the market forms a swing high, price retraces lower, and then price sweeps above the swing high, as we can see here. So that is our retail buy stops paired with the institutional sell orders. So now we have our push down, market structure break, we anticipate the market to continue lower, price comes up, retraces back into our bearish breaker zone, and now this is where we get into our sells, anticipating the market to expand down. So now what would this look like in terms of actual candlesticks? So again, to start, all we have is our sweep of the old high, and then we have our MSB, market structure break, and now we have our bearish breaker zone. So simply from the last down candle or our bearish breaker before the red candle, and then as we can see, we have our entry at the bottom and then our stop loss at the top. And now as soon as the market comes back into our bearish breaker zone, we will be in our trade, as we can see here. And now we anticipate the market to continue lower, and that is exactly what's happened. And again, we can sometimes refine our breaker zone into just the red candle. So again, that gives us a higher risk to reward on our trade, but at the same time, it gives us the opportunity to not get filled just because the market doesn't want to retrace that much. So that was the end of today's lesson. I hope you guys found this helpful. And again, if you have any questions, feel free to message either me, CoinTrader, or Litz in the Discord server regarding help.